more to go. Okay, so Sports Litical Limited is registered for VAT and has a financial year end of 30th of April. The following purchase invoice is received relating to a machine used for packaging. So we've got the packaging machine there for £8,560. We've got installation for £400. We've got spare parts for £550. We've got initial staff training upon installation for £875. And then a goods value amount, the VAT amount at 20%, given a total amount. Sports Litical Limited paid the invoice in full on 5th of May by bank transfer. The following information relates to the sale of office furniture, which was no longer fit for purpose in the admin department. So we're looking at a second item here. So we've got on the 20th of April, office cabinets, desks and chairs were sold for £2,500 plus VAT. Some of the notes that are given to us, so expenditure over £1,000 is to be capitalised under the firm's policy. Plant and machinery are depreciated at 10% straight line method. Office furniture is depreciated at 20% diminishing balance method, and vehicles are depreciated at 40% diminishing balance method. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. Complete the following extract from the non-current asset register for any acquisitions of non-current assets, any disposals of non-current assets, and the depreciation for the year. And this is what we are given. So again, a lot of information given to you there. Okay, what we'll do, we'll start from the top and work our way down, looking at each asset. Okay. So first of all, we've got the production department machinery. Okay. Now what we've got here is an existing asset, a shrink wrap machine. We can see that it was bought on the 20th of November, okay, say the year 2020, for £12,000. Okay, so this is this part here. Each year, it's been charged depreciation of £1,200. And the reason for that is because plant and machinery, okay, this point here, are depreciated at 10% straight line method. Okay, so 1200 is 10% of 12,000, so it's 1200 depreciation charge per year. Okay, and the carrying amount has been updated each year once that depreciation has been charged. So now that we're at the year end of now that we're at the year end of 30th of April, okay, what we need to do is record this year's depreciation for this asset. So year end, 30th of the 4th, 2024. We're working on straight line method. So we know we're going to be using the same amount of £1,200 because it's the same depreciation charge each year. And 8,400 minus 1,200 gives us a carrying amount of 7,200. Okay, so nothing that we need to do there in terms of disposal, because there's nothing to tell us in this scenario that this shrink wrap machine has been sold. Okay, so just recording the depreciation for that asset. Next, we've got the packaging machine. Okay, so this is what we've bought here. This relates to the invoice that's been bought. Okay, so we can see the date is the 25th of April 2014. So let's add that in there. In fact, let me get rid of that circle. So 25th of the 4th, X4. Then we have to look at the cost. Okay. Now, expenditure over £1,000 is to be capitalised. Okay, so this cost us 8,560. So we're going to look at what we can capitalise to give us the cost to be recorded for this packaging machine. Okay, we can capitalise, the packaging machine for 8,560. We can capitalise the installation, and we can also capitalise the staff training upon installation. The spare parts we don't capitalise, okay, so we're not going to do anything with that amount of 550, okay. And the business is registered for VAT, so we don't have to include VAT as part of the asset at cost. So if we add those together, that should give us a cost of £9,835. Okay. In the finance by section, we're told that this was paid by bank transfer. Okay, so we can just enter cash in there. Okay. Next, we're going to enter a bit of information about the product, so just so we know what we're dealing with. So we'll take this from the details here. So the serial number. So we'll put SER, then PM2045, and we'll put location, production department. Okay, so just being consistent with the entry that's up above here as well for the shrink wrap machine. Again, you want your non-current asset register to be clear and user-friendly to whoever's using that. Okay, now we're going to calculate our depreciation for this. So we're at the year end, 30th of the 4th, 2004, and we're still within the plant and machinery, and we're using 10% on the straight line basis. Okay, so 10% of the 9,835 cost would be a yearly charge of £983.50, which would then give a carrying amount of £8,851.50. Okay. Notice that there's nothing telling us about a residual value here. If there was, you'd have to work out depreciation on the difference between the at cost amount and the residual value. Okay, think of it as going from an A to B. However, nothing mentioned there, so we're assuming that the value is going to be nil at the end of the asset's useful life. Okay, next we've got a vehicle. Okay, and we need to record this as well. So we've already got 2 years depreciation that's in there. So year end 30th of the 4th, 2014. Now for vehicles, we're told that they are depreciated on 40% using diminishing balance. Okay, so when we're applying the diminishing balance, okay, method, remember we're using it on the at cost, the carrying amount, So this 6,660. So we'd do 6,660 times by 40%, which should give us a annual charge of £2,664. Okay, you can then deduct that from the current carrying from the old carrying amount to give you the new carrying amount of £3,996. Okay, so just look out for that when you're looking at the two different methods. And then finally, we've got the office equipment. So this is what relates to what we sold. Okay, so we're told here that the date of sale was on the 20th of April 2014, and it was sold for $2,500 plus VAT. Okay, so when we record this in the accounts, in the non-current asset register, year end, 30th of the 4th again. Key detail again, full year's depreciation is charged in the year of acquisition and none in the year of disposal. Therefore, the depreciation charge in the last year is 0. The carrying amount will be 0 because the asset no longer belongs to the business. And the amount that it was sold for was for £2,500 on the 20th of the 4th X4. Okay, remember, don't include VAT within that part of the disposal. Okay, again, typical question which is going to come up. It will come up in your exam. It will come up in the assessments. Non-current asset register is a hot topic. So just, do take your time going through these and looking at the different varieties of scenario you might come up against, which methods you'll use, which policies relate to each question. And then finally, so number 10, Maurice is a sole trader with a financial year end of 30th of June. Maurice is registered for VAT. Maurice has a van which he uses in his business, which he purchased on 31st of March 2013 for $31,500, including VAT. His policy is to depreciate vans using the straight line method at 20% per annum, assuming a residual balance of 20% of the purchase price, excluding VAT. The depreciation is prorated for every full month the van is owned, and Maurice disposes of the van on the 1st of March 2015. Firstly, calculate the annual depreciation which would be charged on the van. Okay, so how are we going to work this out? Well, firstly, we're told that the van was purchased for $31,500, but that includes VAT. Now, remember, we don't depreciate on anything that includes VAT if the business is VAT registered, which Maurice is. It's registered for VAT. So we need to split that first. So 31,500, okay, divided by 120 to get 1%, times 100 to get the net amount, should give you 26,250. Okay, so that's the net amount there. So that's the amount that we're going to be using. However, what we are told is that although we're using the straight line method at 20%, we're also assuming a residual balance of 20% of the purchase price. So we're expecting that at the end of this asset's useful life, it's going to be worth 20% of the cost amount. So to work that out, we do 26,250, And then if we times that by 20%, that will give us the residual balance of 5,250. Okay, so that's what we expect it to be worth at the end of its useful life. Next, we now need to work out the depreciation. So if we do 26,250 minus the residual value of 5,250, that means that over that asset's useful life, there will be total depreciation of 21,000. Okay. However, what we need to do is work out what the annual depreciation will be. Okay, so because we're using straight line method at 20% per annum, we'd do 21,000 times 20%, and that should give us 4,200. And that would be our annual charge using the straight line method. Okay. So an example there where we've had to actually do something with VAT, so it's good to see it from that perspective. Calculate the accumulated depreciation on this vehicle immediately before its disposal. Okay, so again, something that we need to look at here is the policy, which relates to the depreciation is prorated for every full month the van is owned. So what that means is that we have to charge a monthly amount for how long we've owned the van. So let's have a look. So we purchased the van, well, Maurice purchased the van on 31st of March, okay, and our year end is the 30th of June. Okay, so April, because 1 month from 31st of March will be the end of April, so April to June equals 3 months. Okay, so what we'd do there is 4,200, because we know that that's the annual amount, divided by 12 to get 1 month, times by 3 months should give you 1,050 for the first year. Okay, we've then got the van for a full year the next year. Okay, so July to June the next year would be 12 months, and we know that that equals 4,200. And then in the final year, so we're told that Maurice disposes of the van on the 1st of March. Okay, we know that we're starting from July to the end of Feb. Okay, and that will equal 8 months. So that would equal 4,200 divided by 12 times 8. Okay, because we've owned that asset for 8 months within that final year, which should give you 2,800. So if we add all those together, 1,050 plus 4,200 plus 2,800, that should give us total depreciation of 8,050. Okay, and remember, when you're looking at calculating months, you are looking at the full month, okay, which is why we're looking at, say, April to June in the first year and July to Feb in the last year. Okay. Maurice purchases a new vehicle on the 1st of March, trading in the old van as part exchange. The list price of the new van is $35,000 plus VAT. He received a part exchange allowance of $12,000 and he pays the balance using a bank transfer. Complete the disposals account for the disposal of the old van, showing clearly any amount to be transferred to the statement of profit or loss. So again, this is taking it on to the next stage now. We've looked at the acquisition of an asset. We've looked at recording depreciation over so many years. When we get to the point of disposal, we do also have to update our disposals account. Okay, and what we do is we clear that asset from the other accounts because it no longer exists within the business, because we've either sold it or in this case part exchanged it. So looking at this information that is given to us, okay, remembering that the net amount was 26,250. That is what was originally recorded in the asset at cost account. Okay, so we're going to clear that from the asset at cost account. So we'll put 1st of the 3rd X5. We'll put vehicle at cost account and it will be 26,250. What we do in the vehicle at cost account is we would credit it for £26,250. Okay, now we don't often credit our asset accounts, okay, but when the asset has been sold, we have to remove it from the asset account. So we credit the asset at cost account and then debit the disposals account. Okay, what we also have to do is clear the accumulated depreciation relating to that asset. So on the credit side of the disposals account, for accumulated depreciation account, okay, we've calculated that in part B here as 8,050. Okay, that's our accumulated depreciation. So 8,050 goes here. Okay, so again, if you remember that the accumulated depreciation account will have a credit balance, what you will do is debit the accumulated depreciation account to clear the amount of accumulated depreciation for that asset, and then you credit the disposals account. In the next part, what you have is either a part exchange allowance or the amount that's paid. So if the asset had been sold just for cash, okay, then you debit the bank account for the amount received, and then you'd credit the disposals account. However, we haven't actually paid for this asset. Okay, what has happened is we've traded it in as a part exchange. Okay, so part exchange allowance of £12,000. So what we do here is to the vehicle at cost account, okay, for part X, part exchange, we enter the amount of 12,000. Okay. Now what happens at this point then is then the difference needs to be transferred to the profit and loss account. Okay. So the total on the debit side is 26,250. Okay. with the two entries on the credit side, we've got 20,000 and 50. So the difference being the amount transferred to the P&L. Okay, and that's for the amount of 6,200. Okay, I've just entered that in that box there because there isn't enough room, but that would be where you'd enter the total. In fact, let me just make that a bit clearer. So 12,000 and 6,200. So 12,000 and then 6,200. That gives both columns a total of 26,250. Now, if the difference falls on the credit side, then it means that the business has made a loss on the disposal of the asset, okay? Because it will be debited in the profit and loss account, and a debit in the profit and loss account is an expense, okay? So it shows that we've made a loss. However, if the difference falls on the debit side, then it means we've made a profit on the disposal of the asset, and therefore the profit and loss account is credited, and that credit entry in the profit and loss account is income to the business. Okay. Now, it's not the way the business would have to analyze its depreciation over time is to make sure they're getting as close to possible with their estimations, because depreciation is an estimation. You can't give an exact figure on how much something will sell for in 5-10 years time, for example. So it's really important for the business to be as close as possible, because what this means is, although they've made a loss, what it means is they haven't charged themselves enough depreciation over those years that the assets have been owned. So from each year up to that point, profit has probably been slightly overstated, but then when it comes to the disposal, there's a loss. And then it's vice versa. If you've made a profit on the disposal, what it means is effectively you've charged yourself too much depreciation every year up until the point of disposal. So you don't want too much of a difference there. You want to get as close to being as accurate as possible. Next, we've got calculate the value of the bank transfer for the purchase of the van. So the purchase of the van here, so we're told that the list price of the new van is 35,000 plus VAT. Okay, so we know that the amount paid is 35,000 plus 20% VAT, which is a total cost of 42,000. However, 12,000 of that was a part exchange, so 42,000 less the 12,000 for the part exchange of the old van should give you 30,000 that the business has paid. Okay, and in the asset at cost account, that's what you'll have recorded. So for example, where we've got our, let's put our asset at cost here. Okay, we know that we've paid 42,000 for the new asset. Okay, however, 30,000 is what's been paid. Okay, so that's to the bank, and then the part X is 12,000. So we've still got our value of 42,000 shown on the debit side of the asset account for the new van, which is correct because that's the value of it. But rather than it being one payment of 42,000 from the bank, it's split between a payment of 30,000 and then the part exchange of 12,000. And then final question, so looking at, will Maurice be recording a gain or loss on the disposal of the van? So again, we've already covered that in part C, and that would be a loss that has been made there because the difference falls onto the credit side. Okay, so that concludes everything for this week's live session. Okay, there's a lot of information in this one, and definitely a lot of practice that you'll need to do with these type of questions, looking at acquisition and disposals of non-current assets.
Hi there, and thank you for watching the video. If you're new here and passionate about everything accounting, then don't forget to subscribe and give us a follow. We're proud to deliver the best standard of support to our students. We have bespoke study materials, exclusive AT unit videos, award-winning tutors, and so much more. Make sure to follow us on our social platforms to stay up to date with what we're working on. Thank you.